Hello traders, it is Sunday the 29th of May 2022. So I'm recording this for the week commencing Monday the 30th of May 2022, and just having a look at the economic calendar coming up this week. There's no real change in the fundamental news at this point in time, nothing worth mentioning. The drama just continues, but having a look at the news coming up this week, a lot, just so much US dollar news. And of course, we've got the usual monthly non-farm. I might actually do a live market YouTube stream of market analysis while that's happening. In fact, I think that's a good idea. And just commenting on quite a few of these. I do note as well that there could be a potential rate change as well coming out of the Canadian dollar. So if that is going to be the case, there'll be some increased volatility there. But yeah, this week expecting some moves on the US dollar. So the question is it going to continue to strengthen over the next couple of months, or is it kind of is it at the top of the range, and can we expect it to start to come back within that range? And so I think next step is to go and have a look at the charts and see what they're telling us. Okay, so let's kick off with volatility. And by the way, I'm looking at, I'm using here a beta version of PROREALTIME. This is actually version 12. I'm really excited, and you're getting to see a bit of a preview of it. Just obviously the speed of the platform is always an absolute pleasure. So let's have a look at volatility. So principally volatility is calming down, and just general observation here, the 10 and 20 have sort of slipped, so the 10 is below the 20. We've kind of double topped up here, so my expectation is to see volatility stay in this area, and it's also starting to do a little bit of an inverse head and shoulder. Essentially, it appears as though it is calming down, and this could be because it could be sell in May and go away. So as we head into the summer properly, I'm not sure how it qualifies as a summer by looking at the weather outside, but yeah. So moving on to the dollar index. So the dollar, this is an interesting one because we've got a couple of days until the end of the month, and if we do close with a heavily bearish candle here, that could indicate that the dollar index is going to work its way back down towards 96, certainly back down towards 100 to test that from the outside. Broken outside of this range, does it want to stay out of the range? We're going to have to find out. Alternatively, interesting enough, should Monday and Tuesday prove to be really bullish, we could see this start to climb higher, and so we could be given clues that the dollar itself is intending over the coming summer to continue heading on outwards. So there is an equal possibility here. However, I'm leaning just that little fraction, a little bit more, that it's going to try and head down towards 100. We will see, but certainly that will unfold relatively quickly over the coming week. So next thing, we do have a weekly retracement. This is a very strong, very nice, healthy downtrend as trends go. And so this is euro dollar. And this is where I'm really going to be looking for, do we get a bearish rejection off 1.09 by the end of the week, which would be a strong indication that potentially we're going to continue down. But just looking at that monthly candle at the bottom of the range, this would, in most situations, would be an indication that we're going to go back up over quite a bit, and so it could be something that happens. And so I'm just going to keep that in mind. Again, the clues will be at the end of the weekly candle, but certainly I'll be looking to see how the week unfolds. And should we continue to push and close above 1.09, then it starts to maintain that bullishness. So looking here at sterling against US dollar, same thing again. You can see it's back up at a level now, 1.2662, and if it breaks through that, continues up to 1.3250, that could be something that makes a lot of sense. And again, we'd be getting that bullish monthly candle. So again, how it goes over just Monday and Tuesday alone could give us an indication as to how it's going to unfold over the rest of the week. You can see here as well, Aussie dollar against the US dollar, we had that real nice little breakout there, push higher. Makes sense. We've got a potential little bit of resistance where we are now, but it makes sense for it to also attempt to push up to 72.60. And that weekly as well looking nice and bullish, and certainly that monthly could finish near the highs, which would indicate a strong, potentially also a strong bullish rejection. So there are, again, there's the ground has been laid for the dollar to take a bit of a breather. That's all. Kiwi dollar, same thing here as well. Looking for it to break through. Can it do that in the early parts of the week and push through and finish up a little bit higher? And then having a look, say, at dollar yen. So dollar yen is the only one of the yen crosses that has just really failed to kind of just let go and do a bit of a healthy correction. And we have here a nice little tweezer, rejection off the highs, some exhaustion there, inside bearish candle, and so, well, technically not an inside candle, but giving us that opportunity for this to be a break above that and see, again, if we get that weaker dollar, that could be something that pushes it over the line, starts to see it heading lower. However, some of the yen crosses look ready to go again. So actually there's some evidence here to support, regardless of whatever the US dollar decides to do, the yen pairs could decide to continue pushing higher. So I'm just going to be observing that. My expectation would have been that we would have had this at least come back down to test here around 124. It is still very much overextended, but you know, that is something I've seen in the past. I've seen the dollar yen continue continue up. So it is something that it could potentially be doing. So I just have to be cautious of that, but I'll be looking to see if that closes near the lows in the coming days. So Monday and Tuesday are going to be quite interesting in terms of that. Dollar CAD has had a strong correction. Look at this on the weekly. It's given back, almost 50% of the most recent move to the upside. And look at that strong bearish rejection candle. That could, again, hinting there at the possibility that unless things change in the next 2 days, we could see the market start to continue to push it a little bit further down. Just that's based off of that. Dollar CAD as well, also strong rejection of those coming back within the range and potentially a bearish monthly candle. So despite, look, there's just signs of this at this point in time saying that there is really fairly a possibility that dollar is going to come back a bit. Now, interesting enough, just looking at the ruble as well against the US dollar, look at that strong level of support off these lows here, pushing it right back up. And so I would say at this point, it's probably fair to say we're stuck within this range at this point in time, unless the price subsequently comes back down towards these levels. It looks as though it's setting up for a bullish rejection of those levels and looks like it wants to ping back inside that group. Okay, moving on to the currency pairs of interest. So this is pound yen. So just wanted to show you this. I really like there's a potential bullish setup here. If you look here on the 4 hour, we can see that there's a flat level forming here and therefore breakout certainly up to 163.35 could be a good opportunity for me, at least in terms of day trading opportunities. Swing trading opportunities, we've got a really nice break and a retest and an inside bullish candle over here, followed by another secondary or double inside bullish weekly candle, and therefore we're good for a breakout, and a breakout to the upside here could be a trading opportunity, which might even find itself working its way up quite a bit further up. Okay, pound Aussie. The reason I wanted to show you this chart is show you what pure garbage looks like. So just looking at this on the 4 hour, this could be a potential range breakout trading opportunity. Should we have a nice solid breakout to the downside, there's going to be, I would think, quite an accelerated move either way down towards the lows, or if we break out to the upside. But judging by this behavior here, I think that breakout is more likely to happen to the upside, certainly if we do get a weaker US dollar, stronger Aussie dollar. So I keep an eye on that just based off of this. So it's going to be interesting to see how that happens and when it happens, but it is looking a little bit more bullish than bearish, and therefore my first plan A would be to see it break out to the upside. Euro yen is building up to a very nice flat level breakout. Based off this, you can see the same thing again. We've got a pullback, moving averages, a break and a retest. Nice little bullish candle here, followed by another bullish candle, and therefore my expectation, at least initially, is there's a good chance this could do a flat level breakout in the coming day or two and move its way back up to these old highs, probably even further up towards 138. Then moving on to commodities, look at this. So this is something we've been waiting for a while, patiently, but it has or does appear to be unfolding now. We can see the commodities starting to break out through the 784 level, and there we go, starting to move. So my expectation at this time, especially as the indicators continue to look bullish, is to see it head up at least towards these old highs up here. Let's have a look at gold. Moving on to this. So gold, again, took quite a bit of a tumble lately, and this is in an interesting place. It has produced a bullish candle here. There's not a guarantee necessarily that it's going to work its way up, but it has done similar things in the past. Come back down, produced a bullish candle, and pushed up a little bit further. So that could be something that happens. And if it is, then my expectation is certainly for gold to work its way back up to test 1900. However, should there be something that will only make sense down the line, and we're going to see metals start to fail, then of course this is really it. So the key levels for me will be 1834, or even breaking back up above these old highs. So it's a very small area where really I'm starting to look, are we going to break below these 4 hours, but really below this last level of support and resistance, or subsequently above these previous highs? Will give a much clearer indication of where it's likely to go. Looking at silver, I mean, it's produced a confirmed swing low. It's back up above this level of support. It is on the other side of it, so can it stay above that and work its way up? Well, should we finish nice and bullishly here again, if we get that weaker dollar, all things will unfold and make sense at that point in time. Okay, copper as well, looking at that, a similar scenario, very similar, so we'll have to wait and see how those go. Looking for those, especially on the 4 hour, will offer some good clues. Natural gas, struggling, really struggling here. We've got some bearish divergence. We've got that tweezer rejection, a double rejection there. These are usually incredibly powerful clues, especially when we add it up to a nice round number, combined with a previous high here, combined with bearish divergence. The indication here being this is going to push, it's got, further downside, so we'll see how that goes. Then moving on to crude oil. So here we go. This is a nice little trade I'm in at the moment. Presumably most other people are. This is a solid little breakout to the upside. It's been building up for a while. And again, all signs point to at least heading up to 120 again. Let's look at Brent crude as well. Brent crude breaking out a little bit earlier, but also got that potential. If we could just break past these previous highs, then I think there's nothing really stopping it heading up towards 120 and 123, possibly further, but at least as an initial target. Okay, moving on to other commodities of interest. We've got a bit of a building up over here. Pressure, I beg your pardon, building up. It is struggling. I want to see if it can close. I want to see a nice monthly close right near those highs potentially, and then we could see sugar working its way to building up above the 20 mark level. Coffee as well. So coffee's pullback. Look at that bullish monthly candle off this old level. I could adjust it up a little bit off the 200, pushing back up. It really struggled to get through here, and so that's still going to be a challenge, but it's showing a lot of buyers below here. Lots of buyers here, just not enough buyers to keep it going. But this is a strong indication it is going to take another run at those highs. We'll see how we do. Good. You go, coffee. Good for you. Okay, and again, we've got wheat as well, continuing to produce an uptrend on the weekly, back on the other side of this level of resistance. And so the question is, it's produced some bullish candles. I think it's going to push a little bit higher. It just doesn't look super strong. But then again, there was a nice little double bottom here on the 4 hour. So, yep, that's got some bulls, buyers ready and waiting. Meanwhile, cotton is just sort of slowly but surely turning over. Look at that bearish candle. A lot of this being the implication that this uptrend is certainly coming to an end, where we've just got all this exhaustion over here. So certainly a break below this low here will indicate moves back down towards the old highs, or at least the start of a monthly correction, which is very much overdue. You can see that we've had that big acceleration. The question really then would be is how much of a correction, a very small one. Well, we'll have to see. All right, moving on to the, well, considered MVP, certainly the most popular players. Let's have a look at the global indices, starting off with the Dow. Okay, so far the Dow has bounced back off those lows. We had a really good push up to the upside. This is pretty much, I guess, the best case scenario that I could have expected last week to play out as. But we are now entering this as an area where we're now looking to see, can the market subsequently survive this? So I would say any strong failed or bearish rejection candles we get within a week's time could be an indication that we're likely to have an even bigger correction. So in my mind, if this fails, we will get a much bigger, much more dramatic correction to the downside. But is it feasible that the market is going to attempt to recover from where it is now? Yes, that is a feasible. It is not an unreasonable or crazy assertion. It is certainly a possibility. But at some point, there's going to have to be a bit of a retracement on the lower timeframes, the 4 hour and so on. So really, I'd like to see a push up, hit that 34,000 mark, try and stay around that point for the close of the month. So we get a nice bullish candle closing above these highs, and then we could deal with subsequent retracements. I want to see it get back up above that 50 moving average on the weekly. And I want to start to see a confirmed uptrend on the daily. So looking at the S&P as well, we've managed to break up above that 130 level. We're still within a downtrend on the weekly. So this area is a particularly tricky area, because it means, for example, we could come all the way back up to 4,400 and then finish down, which gives us a bearish rejection candle, which then leads to a much bigger fall to the downside. Okay, so you can see it's desperately trying to stay above that level on the monthly, and that's what I needed to. I need to see this close near the highs to give to start to show to reveal actually how strong it is. If it closes roughly where it is now, then that is not a strong enough sign of confidence, at any rate for me. Won't instill enough confidence. Okay, we've got a downtrend here. Again, we're pushing back up. Can we get back over that 13,879 level, back up to these highs? Can still ultimately result in a strong rejection, but it's the amount of energy required to do that. And if it can deliver that, then clearly the market has still got plenty of buyers in it. But this is great. So there's some really good buying, trading opportunities this coming week. This last week, I beg your pardon. So Mini Russell as well, having shared quite a bit of weight coming back, just beautifully bounced off that 1,700 level. Again, I'd like to see it finish with a bullish candle. And all of these could lead subsequently, again, here on that weekly, looking for it to break up above that, pushing back up to 2,100, 2,150, to get back up above that slowly but surely. But that would be a good indication of possibly us leading back towards a really nice bullish back end of the year, because holy cow, we're nearly in the middle of the year. Looking at the FTSE, look at that, man. That's a strong bullish candle. Now, in similar situations, we could potentially call that a hanging man, so we might be a little bit concerned about that. You've got a lot of indecision candles here. But the point is the FTSE has never been known for its strength compared to the US indices. And I'm looking at it now, and it is certainly not weak. And it should be, if that was the case. Let's look at the DAX. The DAX itself, really nice bullish candles. This solid bullish candle closing near the high so far. Again, we've almost got a weekly uptrend. If we could just break up above this previous high, we'll have a confirmed weekly uptrend. And it's not impossible. Okay, again, I'd like to see it break up above that 15,000 level and see if we can do that. So lots to watch to see what the implication is over the coming months. We've got a potential higher low here on the Euro stocks. Again, breaking back up above this level gives us leads towards the implication the market is going to start to work its way back up to the highs. The Nikkei potentially here also a higher low, so I want to see if that's going to push a little bit higher. But again, that in itself will not be enough of a clue. It's going to have to be how everything else closes. Looking here at the ASICs, for example, you know, to give put some perspective on it, look at kind of where it is. It's really been staying in a very tight little range going back all the way to sort of actually a year ago, July. It would have been pretty volatile for most people who've got in the last year. But there's that implication again. We've got an inside candle, double inside candle, a break above that is a really fair assumption that or the probabilities are that it's going to work its way back up to 7.4 and higher. So just, but, you know, we had a good recovery. The question is, there going to be a follow through? Because actually this isn't enough. This is just the green shoots. We need to see that follow through. Okay, moving on to equities of interest. Royal Mail hovered around this area. I've been talking for ages about the bullish divergence and how much it's desperately trying to shift and turn and push back up. And all it's really done is just stay in that area. Okay, so there's not enough at this point. I'm not seeing enough of that. In fact, that bullishness that was there is just the brakes coming on. Nothing so far is showing. We haven't got any really bullish signs here. It's just treading water at this point in time, but not looking super, super strong. Okay, so that one, until we break above these highs, I'm not convinced, buddy, that you're looking really that good or that healthy. And your next target anyway just puts you back up at about 400, so we can see how that goes. All right, let's go to Amex. So Amex, there we go, managed to stay bouncing off its level of support here, really strong. If it could follow through, I want to see it push back up to that 180 level. It's had some strong resistance in this area, and I want to see if we can get past that. That would certainly be a bullish sign. I mean, a weak market is not going to keep breaking through tough parts. Let's look at Apple. Apple as well, look at that really strong close and finish above the highs. Again, off that level that was resistance to potentially find support. If we finish with a bullish candle here, then I think it's just saying to me, look, I want to test these levels again. That's the next step. So we're always kind of watching, okay, this week, which way does it look like it wants to go? And then it's giving us clues. But that is certainly one of the things it's trying to do. Look here as well, you can see on ARC, Miss Woods is likely going to be breathing a little bit of a sigh of relief if she could start to see a bit of a turnaround happening here. I don't think it's going to struggle to get past this 49.87 at this point in time. It's got a higher low. It's got an uptrend on the daily. We've got bullish divergence. There is a bit of that bullish divergence I wanted to see. I want to just see if we can get past this. So I needed to get back up into this green zone. Then it starts to become really attractive in terms of buying. So that would be great. Start for me getting to look back into those. Then we've got AT&T. Look, as I said last week, it was looking pretty strong. Really, it's got to get outside of this zone. And hopefully they've got to a point where they're not supporting white nationalism as much in the US, which I know is a bit of a dig, but it is a serious one. And so hopefully that is the case. Now, they've actually been very quiet of late in the news, so hopefully that means they've kind of sorted themselves out. All right, so we really want to get them to break above that 22 level, and then I think it's looking pretty good. Berkshire Hathaway, I don't doubt Berkshire Hathaway is going to be fine. I really don't. It's got a good diversification and not exposed, interestingly enough, not exposed that much into technologies or even cryptos, and so therefore is just better suited to a faster recovery. Here we go. Look, break above 324 will set it nicely up. A bullish monthly candle here. That's a solid level. That's a ceiling, 350, 350. But there's nothing stopping it from getting back up to that level between now and then. Okay, BP, nice bullish close to the upside, which we're not surprised because we knew that oil was going to be pushing higher. So we know Exxon's also going to continue to push, and they must just be loving this because they are in solid, very solid position here, and haven't been in a while. So there are going to be some big paychecks, oversized, ridiculously overpaid execs this year. Okay, Coca-Cola. Also, that's a solid recovery, but I would have really have preferred a retest of 56.40. Really would have been better for you, Coca-Cola. But again, here it's got some possibility. I don't like this. I prefer a really solid reset because at some point it's got to pull back to the moving averages. It has to do it. It has to do it there, has to do it there, has to do it there, has to do it there. Interestingly enough to me, that was COVID's reaction, and this is what's happened while the rest of the world has had a real drop, or at least while the rest of the US has had a strong correction. This is all we got out of it. So it's just super strong. General Motors as well. That's going to be a very, very tough battle, but this is a nice solid sign. So I do expect this to push back up over this last level. Excuse me, and potentially work its way out of this range over here. If it can get back to the bottom of this range, then the next step up is working its way up towards $50. JP Morgan Chase. That is a really good solid bounce. Look at this one over here. We've had them in the past, but even here it was struggling for a while. This is a close near the highs. So that implies that the recovery, the push high will be fewer than the candles we have over here based off of this one as well. Again, there's nothing just yet stopping it from pushing back above those levels there. Meta. All right, Meta. So Meta's got a lot of buyers here. You can see it putting on the brakes, some strong buyers, but not a lot of love above these areas. We'll see how that goes. I need to see a strong, again, I want to see a strong candle close near the highs. Nice bullish one. That weekly, though, looking good. Looks like it wants to form a bit of a turning point here and start to push its way a little bit higher. It's got to break above these levels here on the daily. But there's what I'm expecting this week is for it to just try to push back up to the top of this range. We'll see whether we get back up to the top. I mean, remember that when people have a lot of money, they'll just diversify. So when not every single person who invests in Meta or AT&T, for example, is buying into them because they believe in the product or because they like the brand. Sometimes they're just diversifying their portfolio. Sometimes they're putting it into a fund which is already diversified and includes those aspects. Okay, again, we've got, just moving on, we've got Morgan Stanley, bullish candle here, looking good. Breaks are on, it's closed near the highs. Again, I think the target for this coming week should be 93.23. Any of these where they exceed the targets obviously adds to the case that we're probably looking at a nice, somewhat bullish market in the coming months. It adds to the case that is the likely outcome there. All right, look, poor old Netflix having shaved off most of its value, at least almost, let's say, looks past 50% of that, certainly. A little bit of the brakes coming on here. I want to see this get back up above 250 because if it can get back up above that, it can make it back up to 375. All right, so we're going to see if that's the case. So this is going to be one of the scenarios, as Buffett says, is when we'll see who's naked when the water goes out. So if the market does start to recover over the coming months, it's going to be interesting to see which of these recovers, if any of them get left behind. Does Netflix, Spotify, Meta, any of those, do they get left behind? We're going to have to see how that goes. Okay, NVIDIA as well, almost just back up above. If we can just close back up above 200, then at that point it becomes a really good spot for it to start to push higher back up above this 230 level. All righty then. Okay, PayPal. Again, also put on the brakes. We're right down at these lows over here, and therefore a push back up to 119 is also quite feasible. Again, yeah, that's what I need to see. But you can see bullish divergence coming in on the indicator, on the MACD below, and also price action here. So get above 90, push up to 120. We've got an uptrend on the daily. This is feasible. We just got to get past that $90 level. So for me, if I was a day trader trading on equities, there'd be some good money-making opportunities this coming week. Same here, Spider as well. Look at this, almost trying to break through that level. If it's a breakout of that, it'll get through the 72.60 level and work its way up to at least, I would say, 80, around about 80. Can it get any higher than that? We'll see. The weekly also looking very good. So this is still a downtrend, and therefore a pullback. Looks like the initial target is 80. If we're still, again, remember that I'm playing out a couple of different scenarios here where we might say, okay, we're we're going to get, we're still within, are we going to be part of another big correction to the downside, which is going to be way more fearful, potentially. Or we might even get something that was like a double bottom, and then we start to climb from that. But if the market is ready to start climbing again, then I would expect this week to see some nice big moves start to break these previous highs on the weekly, and then it supports the idea that we get back up above the 50 moving average, get some nice uptrends on the weekly charts over the coming months, and then we're back into that nice long bull market. Okay, Spotify. Okay, Spotify is the same. It's very similar to Nvidia, Netflix, and so on. It's got pushed down past the lows here. Very overextended to the downside, folks. It should very easily be able to work its way back up to $150. No bullish divergence there, but certainly that price action is telling me that it wants to go back up to 155. That's its initial target. Tesla. All right. So that's not bad. That's a nice little rejection, nice little tweezer of impact sort of signal over there. Plus, we've got a double rejection. It's a U-turn effectively on pricing, and so it's going to push. It's going to try to get its way back up. The really big challenge for it here is there's going to be some resistance around that 780 to 800 mark, excuse me, and then the next challenge is going to be 900 just to get back up to these old highs here. But I feel, again, if the market is going to be doing it, it's going to break these highs here. I think that's going to be the case. And it's going to come back up to test that 50 moving average from underneath. And so, yep, that's a feasible possibility there. Vanguard as well. Look how strong and bullish that is. Look how many of these have closed with these bullish weekly candles right at the very end. That is generally not a sign of weakness. And it's also not a sign of a single week. It usually is an indication that there's going to be some follow through. The question is, will we get follow through for the early part of the week and then a failure on the back end of the week? I want to be optimistic. It pays to be optimistic with the stock markets always. It does not pay historically to be chicken little. It pays to be optimistic. So let's have a look and see if we can close, especially on these monthly candles. Can they close near the highs? That will be a good sign. Now listen, selling in May and going away kind of thing does imply that we can have, terrible markets between now and if we get a Santa Claus rally. It does often imply that, but we can also have we've already shed a lot of weight. This could be similar to this. So this was February and March, and then we just had April, May, June, July, August. We can have that. We can have some strong growth. So again, it pays to be optimistic. Cool. Let's look at bonds. So again, bonds are very overextended, similar to this. They do need to do some of a move. We've had an uptrend this week. That's good. But they're coming into that weekly area. And so they could continue to head down. I think they're overextended. I think that there is a good, fair possibility here that they could continue to head a little bit higher. If we finish, it actually comes down to how bullish we finish here on the monthly, and then we'll see a break above the high. Then we'll see a confirmed swing to continue to head a little bit more towards the top. Euro bubble, similar potential indecision candle, not looking super bullish here. So again, I'd have to finish with a strong green candle to feel that there's going to be follow through in June. And it's not really impressing me at this point in time. Here we've got the strong resistance here at 155. I want to see us break up above that. You can see the weekly struggling to do that. Just not finding a lot of love. All right, let's finish off, with cryptos. Okay, so in one of my posts on Twitter, I was just saying that, if equities are going to have a rebound, and there has been a really strong recent correlation between cryptos and equities, it is not crazy to think that cryptos will get some of that love and we'll see a rebound there. So again, we could see ourselves pushing back up into these old lows, finding that, look, to me, it is technically in a range. How do we know this? Because we could see within these recent highs and these recent lows that so far it's within a range. So what it should do if it's within a range is recover, rebound, and start to work its way back up to the top of the range. And ironically, if that is the case, that actually supports the idea for equities to go higher if they are still correlated, and they are still correlated. So I'm looking to see if we get back over that 30,000 and start to push up towards 35,000 this week as well. Let's look at Ethereum. Ethereum has dipped down. We've got definite bullish divergence on the indicators here. We are coming back down towards the lows here, so I'll just put a little bit of a level in there just to mark that as the potential bottom here. We'll see how that goes. And I want to see it push back up towards 2,500. Start to work its way back up from this. So as I said, some bullish divergence. It could still mess around this week and we start to get like a double divergence, another rejection of the lows, and then it starts to break up above these highs. But that's what I'll be looking for this week. Pushing back over major round numbers and previous highs. Cardano. You see Cardano is still sitting at these lows here. Look at that clear bullish divergence on the indicator down here. So again, I look for it to break back up above these, starting to break up above these highs and starting to produce a bullish weekly candle. But a nice strong big one would be fantastic. If an entire weekly candle would come right up into the old lows, that would also be a great signal if we can get that. Binance here as well started to pushing. That's great because it's taken a first run back up at 330 and it's produced a higher low potentially over here. So I think again a nice little bullish weekly candle. It is very keen, and you can see if you just see keep an eye on this, you can see that it has already marked the bottom of its range, and there's the top of its range over here. So it is keen on working its way back up to the top. So that's interesting to me. Again, Solana coming all the way back down to these old highs down here. It's younger in terms of that, so it's got less history, therefore it hasn't got enough to produce a confirmed range. So, but I would expect, looking here, it also has found a bit of a bottom. So let's just go and there we go, put that in and see if we could do. We've got bullish divergence. There's a lot of signs here showing that cryptos definitely do want to push higher. I've had this in the past where I was talking about, for example, Royal Mail, and I was saying that Royal Mail was kind of putting the brakes on, and you can see this, and it's ultimately put the brakes on, but it hasn't actually turned around despite all the bullish divergence. That's not really going to be the case. I can't really expect that to be the case with cryptos. Cryptos are tied and supported in many ways by equities, and equities, if they do as a group, tend to push higher. It would be really odd for me to not see it. There can be a lag. There can definitely be a lag. I'm just saying there is bullish divergence. There are signs of it. There are levels of support on certain levels. And it's not crazy to think that they're going to do it. You can see a nice little range here, nice for it to break out. And when it's been in a range this long, for example, what happens after it's been cooped up for a long time? It takes a nice run. And so therefore the run on this could fairly work its way up. If we could break out of this range this week, then I would say what becomes a feasible target, certainly somewhere around 34,000, 37,000. If that could happen, it's not impossible. Could happen in a week. It depends on how excited the markets get. So that could lead to something else that happens. Let's see what's going on with this war between Russia and Ukraine. I don't know, but there could be something else that creates a nice mood, an optimistic or upbeat mood for the markets. Otherwise, ladies and gents, please keeping in mind next Friday is going to be non-farm payroll. I'll do a live streaming on YouTube as well. I'll book it in and then I'll walk through the markets and we'll see where they are. But I expect some really good trading opportunities this coming week. Oil is still looking nice and bullish. Gold, we'll have to see how that turns out. Equities have really got that potential to keep going at least for the next coming week, and then we'll see how they finish. And if they finish strong, that bodes well for the coming months. All right, guys, trade carefully, manage risk appropriately, and yep, stay, I was going to say happy trading.